Yeah, it certainly is looking like Healthscope is destined to fall into the arms of private equity once again. You saw the board yesterday open up its books to Canada's BGH Capital. Brookfield put up a $255 offer. That's slightly sweetened from its $250 a share offer it put up back in April. But what really is interesting is, aside from the modest bump up in premium, the key difference now is the firm had to run a dual track offer. So you are forgiven for finding it a little bit confusing, because it is. Now, what they needed to really do is find a workaround around BGH's collaboration with Australian Super, sorry. So that collaboration actually holds about 20% of the register. Australian Super is a 14% holder in Healthscope. It is the larger shareholder. And what it's done, from just recall that BGH has locked up essentially Australian Super. They did it months ago when they lobbed a $236 offer back in April, that they nailed Australian Super down to them not going to go with any other bidder regardless of any other offer. Higher obviously. So they essentially had a blocking stake in the company. Now, Brookfield's workaround seems very interesting and intriguing this time. So 3 things really to point out to kind of get around this kind of blocking stake in the company, if you will, because obviously the $255 offer is higher than the $236 offer, and it's sweetened, and the board opened the books, which is a good sign. So the first thing I would say is this is through a scheme of arrangements. Sorry, the first offer for Brookfield at $255, as I said, their vote for that scheme opens April 1st next year. And why is that so long dated? It is long dated because the BGH and Australian Super exclusivity arrangement expires on the 31st of March. So they timed it right after that breaks apart. Second thing I would say is they also, Brookfield it is, created an unlisted vehicle for a certain percentage of shareholders, existing shareholders, sorry, to invest alongside of itself in that entity. So once again, it's sweetening the deal for the Aussie Super to say, hey, looks like an interesting vehicle, and we're going to take a punt on it. And finally, I would say the scheme of arrangement, if it doesn't get through, if BGH plays hardball and they're blocking the stake, there is, like I said, the dual track offer. So Brookfield put up a $242 per share offer as a takeout. It only said it needs 50.1% of shareholder votes to get that across the line. Obviously, BGH is kind of in there with, as I said, 20% of the register is not going to cut it. So what it would be left with Aussie Super is really an unlisted entity invested alongside Brookfield. I don't think it really wants to be in there. So what do you do with the name here? Where is it going to go? It seems like to us now it's turned into essentially an arb play, I would say. I mean, I think there is a little bit of risk with FIRB intervention. Obviously, they need the Foreign Investment Review Board to look across this. Healthscope does own about 15% of the total market here in Australia, as far as between private and public hospitals. So it's not insignificant. I think the risk is quite low, to tell you the truth. It's not a really major infrastructure play here in Australia for a foreign investor to buy. I don't really see risk that Brookfield's unearthed some kind of bugaboo really in the books. Remember, Healthscope had just run a strategic review in the last couple of months, really vetted all kind of the Furbies in the book. So don't really think that's a problem. What we do have right now is it's offering about 10% upside to the total deal value. This is via the scheme of arrangement. The total deal size would be $258.5 per share. Now that includes a 3.5-cent divvy that shareholders will get. That is come February in the interim. When the interim is reported, you pick that up as of course next year. And while I believe getting obviously the scheme of arrangement is going to be a hard slog, it's difficult to get that across the line for obvious reasons for BGH. And you do have a 5-month wait for the vote. I wouldn't really rule out BGH actually matching Brookfield's offer or actually coming in a little over the top here, because let's face it, BGH this is a new fund, but they're old guys from TBH and Carlisle, so they understand the business quite well. They have egg all over their face. They've been rebuffed now twice by Healthscope. And yesterday, if you didn't see it, they were given the cold shoulder by education company Veritas. Did exactly the same thing. They locked up Australian Super, tried a lowball opportunistic offer for Veritas at $550. The shareholders of Veritas said, "Go figure. What are you going to do? We're not going to take your offer. Essentially get out of here." So exactly the same thing happened with Veritas as you saw with Healthscope. So now you have BGH just sitting there with no deal, right? A big fund, no deal. And you know what? They really want this asset. They understand this asset. They're probably a better suitor, to tell you the truth, than Brookfield for this asset. So, I think it's interesting. If you're an existing shareholder, I think I'd be hesitant to let some go at these levels. I think at least until we understand where BGH position is currently, what are they going to do? And even if you're not in the name, I think it'd be worth picking it up for some upside. Unless you can lock in 10% return between now and April in this tape, which is highly volatile, it's actually almost a safe haven because your downside risk is protected because you have these bids coming through it. So net, I think it looks like an interesting opportunity, and I think the valuation there, as far as the premiums paid, is realistic, and it's good.